up, YouTube? Look, we're looking at the market, and it's it's pretty bloody out there. Where's the bottom? Where is the bottom? Everybody wants to know where's the bottom at. And I think we need to keep our eye on these yields, right? These 10-year yields, have they peaked yet? We're going to go over the macro, the technicals, and yeah, stay tuned. We're going to go over this. Look, oil, the macro forces, oil's pretty much down today. The dollar try to break out, but is this a real breakout for the dollar? When we look at the RSI, when we look at the divergence, the dollar is actually, the buying pressure isn't that high. You can clearly see, right, that the dollar's buying pressure has been falling and price is starting to lift right now, but it looks like it might fall over. So this is going to be some positive news going into tomorrow's PCE print, right? That's where the news is at. Now I want you guys to keep in mind as we look today, look, the S&P is, breaking the bull market trend. So let's go ahead and accept the fact that we are no longer in a bull market trend. We are no longer in a bull market trend. That was violated, right? Here's your trend. This is your trend. That was violated. So we're looking like we're either going to be going sideways or we're going to sell off. We're either going sideways or we sell off and we go back into a deep bear market. I just think that is not the case. Okay. Now here's one of the arguments. By the way, later on, I'm going to get on with a macro bear on TikTok. I am a macro bull still. I'm still holding on because the news is not, we haven't got through all the news. We haven't got through earnings. We haven't got through all the macro, but I want you to keep in mind this. The S&P broke the trend earlier in the year and still recovered, right? This trend was broken to the downside. S&P still recovered higher. And this just kind of reiterates that the market in general is taking the punches. It is taking the gut punches, and it's, it's pretty fearful out there. It looks ugly, but it's taking the punches and it's moving higher. Oh, well, we had another trend break back in March and the market went higher. So yes, we are breaking the trend. It makes you cautious. It causes you to second guess and say, you know what? Maybe this is over. Maybe we're 2008, 2001. We're going to roll over. Everything's terrible. I don't think so. We'll stay tuned here. The main reason too, right, is on a technical basis, we're at the lows for the RSI. The RSI is now becoming actually oversold a second time. We're getting us on the daily chart. We're getting the RSI oversold a second time. There will be a bounce here. I think the bottom comes between tomorrow and the Fed meeting, which is November 1st. I think that's going to be the bottom. Expectations will turn. Expectations will probably switch, turn around. And we're going to go over why. So yeah, S&P is falling. A lot of this is not earnings. Earnings are coming in better. Still pretty positive. Earnings growth is up. So stop making the argument. I hear people make the argument, earnings are down. Earnings are not down. Earnings are up. Earnings are up. Yeah, stocks are getting punished right now for a little bit of weakness, but is it really that they're getting punished, or is it that investors are weary of the inflation print numbers coming in tomorrow, by the way? And also the Fed, what is the Fed going to do? What are they actually worried about? I think that's the case here. In the previous cycle, we ran up into earnings, and this time we're running down into earnings. We did drop all the, major levels though, so it looks pretty dire. Maybe Mike Wilson is right because that 3,900 mark is down here. But remember, Mike Wilson is still bullish on the market. He's targeting 3,900 and he's still bullish on the market. He just says pick premium stocks, right? Pick the premium stocks. And plus crypto's in a bull run. So we do have some bulls here for the most part. Now remove that, get off here. So let's go through the case though. What is actually going on here with the macro? Okay, what is going on with the macro? First and foremost, let's look at the rate situation. This is what's driving the market currently. It is rate risk. Okay, on a tech, now it looks pretty bad. Rates are at what, 5%? This is the 10-year. No, this is a 30-year. Okay, 30-year rates. But the opposite of that is going to be the bond market. For the market to bounce tomorrow, we need the bond market to break out. It is in a bullish divergence. It's moving up. Buying pressure is moving up for the bonds. Buying pressure is moving up, although price has been declining. So what do we expect? A breakout in bonds. What is that going to do? That's going to pull down rates. That's going to cause or fuel the rally in stocks going forward. Now, you probably got here because you want to see fear, fear, fear. Things are all, falling apart. What is the actual fear here? What is the actual fear here? What up, Dimaj? What up, Tigger Media? What up, Chavez? Let's see what we got here. Dimaj, hi, Amazon Pop. Did they beat earnings? Oh, you know what? I missed Amazon earnings. My bad. I was on I was on a call with somebody, and we got into it about the Israeli-Palestinian war a little bit. So I was late. I wanted to finish that conversation off. We might do that content into the future, but I did miss Amazon. I'm not even worried about it. I'm pretty sure Amazon beat. Let's take a look at what the stock price is doing in after hours here. Amazon, one of those major players. Ooh, dang guys, I missed it. Let me pull it up here before we hit the macro, or maybe what I'll do is we'll go through the macro and then we'll do Amazon. No, we'll do it like we did last week. We'll do the earnings first. Okay, let's just do the earnings first. Then we'll go over the macro. By the way, GDP, while I'm talking here, GDP came in better than expected. So for all you recessionists out there, oh, the economy's going to fall apart. We're in a recession. Bro, what are you looking at? What data are you looking at? Ford misses Wall Street expectations. Of course, they suck. All right, here we go. I got the Amazon earnings. So yeah, dude, the recession is not here. You keep, you're getting fooled. There is no recession. I'm sorry, there is no recession. The GDP numbers showed it. Plus the PCE quarter over quarter was the lowest it's been in and we're gonna go over that data, was the lowest it's been in 2 years. So PC is coming down. Inflation at the core level is easing. Oh, well, headline inflation is up. Well, oil's down for the month from 90 to 82. Oil's actually down. So the inflation picture is looking better. And I think that's what investors are looking for. So yeah, there's the 30-year yields. Let's go check out Amazon really quick, and then we'll come back to this. I actually got to move this tab. My bad. So yeah, we're not getting a recession. PC should be coming in. The Fed 99. I see you on there. The Fed 99%. Let's throw that up there. 99% chance the Fed does not hike. The market just wants to, see that actually follow through. I believe we sold off much more. We sold off much more than I thought we would. Okay, we sold off a lot further. Here it is. Than I thought we would sell off. And there's a lot of fear, right? I think there's a lot of fear mongering, and you're going to hear that fear continue, which is why I want to, I want to debate some of these bears, because I still think that the year ends higher. Now, the all-time high scenario, that's really coming into question here. If we don't start moving up by November 1st, then we're going to have to question that thesis. But we still have a lot of data behind us. Okay, here's, bruh. Oh, yeah, here it is. I'm just going to have to back up on it. Oops. I guess that wasn't the live. Where's the live one? Where's our live at? Why is it not live? Okay, this is Paul Hickey from Bespoke. See what we got here for Amazon. Amazon earnings today. Let's hear it fresh. All right. I just don't see a bear market. Yeah, no, it's just a big pullback. There's going to be buyers. They're going to step in. It just, you're going to be wrong for a while, and then we'll be right. Let me know if you guys can hear this.
But they aren't the only factor at play here.
You guys can hear that? And yeah, if you guys are on TikTok and you're bearish, I'm going to be doing a stream with, what's his name? There's a macro bear. He's a crypto macro guy. He's bearish. We're going to do a stream later. Okay, cool. Do you know anything about mutual funds selling stocks by end of October? Could this be causing the pullback? Sanoop Luke, what up, Sanoop Luke? Look at. We're going to go over why. Stay tuned. We're going to go over why this selling has been. Listen, October is the bear market killer. Keep this in mind. Seasonality has been the story the whole year, right? Which means the market is moving in correlation with how it usually does. September is the worst month. October is the bear market killer. We should be, okay, we're going to play it. October is the bear market killer, which means we should be bouncing. That doesn't mean we will, but the fourth quarter is always the strongest quarter. Seasonality, consumer spending, right? Employment, jobs. You also have December in the pre-election year being the strongest month. So we are going to recover here. There's just a bigger sell-off, right? Technically, we look pretty weak here. Earnings are coming in positive. Manufacturing, industrial growth is picking up. Services are not showing any sign of declining. And inflation is falling. And inflation is still coming down. And oil is not going out of hand. Oil is still in check. The dollar is the issue, not a whole lot of buying power, but the dollar is moving up a little bit. 10-year yields hopefully have peaked, but 10-year yields being higher causes the Fed to peak. So we're going to get a bounce here. It's going to happen. The question is, does it materialize back into the bull market? All right, so here's Amazon earnings. Let's go over those right now.
All right. Mike Santoli joins us here on set as well. As we do go through these Amazon results, do want to get your take on the fact that NASDAQ Composite in correction territory, the S&P 500 didn't. And I'm already going to Deirdre Bosa now for those Amazon results. Dee, what do you have for us?
I'll be quick, Morgan. Let me give you the top and bottom lines, which are a beat, a massive beat in terms of earnings per share. 94 cents versus 58 cents expected. On the revenue side as well, $143.1 billion versus $141.4 billion. Amazon shares are only up 2.6%. So let me keep diving into these numbers. We're going to want to look for AWS as well as that guidance. And I'll come right back.
All right. Deirdre Bosa, thank you. Mike Santoli, I will go right back to you. Yeah. AWS is really going to be the key here, but also online stores and what we see in terms.
So it looks like Amazon smashed expectations, just like Meta smashed expectations yesterday. Global Trumps. Okay, cool. So yeah, they smashed expectations. I'm going to put let me see if we can see cloud, see if it gives us cloud revenues. Web services revenues were right in line. They kind of missed. Q4 revenue guidance 160 to 167 versus 160 cents. So guidance is kind of shaky, right? Expected 166, it's 160. They're not giving you, fair guidance. They did smash earnings though. Are you kidding me? 94 cents per share. Revenue, Amazon.com beat. Listen, the mega caps are all beating. Tesla's the only mega cap that hasn't beaten estimates. They missed top and bottom line. I think it already priced in most of the weakness. Web services, okay, I'm just trying to see if there's any other segments. Ford misses. Who cares? Tesla's going higher. There'll probably be some more. I'll look at it. Okay, so let's look at the Amazon price now. We got that in. Got that into play. So Amazon, and I'll get your guys' comments. Let's take a look at Amazon. Back to the other one. It's moving up to 125, looking strong. Okay, Amazon. All right, so here's what we got. Amazon smashed earnings on the top line, on the bottom line, and their guidance is even to higher. That's positive. So Snoop Luke, do you know anything about mutual funds selling stocks by October? Could this be causing the pullback? The pullback is being caused by fear. I think mostly fear of yields going higher, fear, uncertainty of where the Fed is going to push rates, fear that earnings are going to be negative and collapse. That's not the case. We're seeing mega cap. Listen, more companies are beating. Tomorrow, I'll, make sure you stay tuned for this week's newsletter. It's going to be all about earnings. This Saturday, the newsletter will talk about how many companies are beating earnings, where the earnings picture is going. It is positive. Consumers are still spending. GDP came out strong. The sell-off is anticipation. I think what the market is doing is it's selling off, right? It is pricing in a worst case scenario for tomorrow, which is the PCE data, the inflation data. It's selling off in anticipation because of what? Shut up. Sorry, stupid TikTok's pissing me off. In anticipation of the worst case scenario. That's what it's doing. Just like it did in the last quarter. What did it do? Stocks exploded to price in perfection. They exploded pricing in the best case scenario. Now they're pricing in the worst case scenario, which means there's going to be a bounce at some point. RSI is very oversold. We're going to bounce here. Mark my words, we will bounce. I'm going to look wrong for a couple days, maybe even a week, but I think by November we start to recover pretty strong in November. We're going to recover. This is a buy the dip for a lot of people. Earnings are not falling off a cliff. Inflation is not rising. All right. So that's what I would say to you is this pullback is a lot of fear, a lot of selling. We see the dollar moving up a little bit. Look at rates have not made a new high based off the GDP data that just came in. Rates didn't make a higher high. Rates, hopefully they peaked here. Even if they didn't peak, the fact that they are at 5%, the Fed is now more likely to pause. And the market is pricing that in 99%. This is a good setup. I'm telling you, this is why crypto is moving forward too. Crypto is breaking out. Crypto is above the levels because tokenization is close. The ETF is close. More than anything, global liquidity is starting to pick up. The ECB, the European Central Bank, and we're going to go over this data again, paused rate hikes for the first time in over a year. 30% of central banks are now starting to end their hiking cycle. Okay, China just came out with more stimulus. China will be stimulating markets going forward. They're coming out with a big stimulus. Japan is back to yield curve control. Therefore, global liquidity is picking up. The hiking cycle is pretty much over, and it's just being dragged along. Now we have a war, so this puts, some risks on the table with the war. People are nervous. Okay, is the war gonna, result in some oil spiking? That's the real issue. Just watch oil. Okay, next comment. Okay, so we got a flexible order management. I don't have bots here, bro. Don't worry. I'm not even big enough to see bots on my channel. I don't care about that. Amazon smashed it. Yep, 100%. What up, Yasin? Shout out to you. I have a question about Katina Inu. Do you think it's a good coin? Asking for a friend. I don't even know what that is. The fact that I don't know what it is, it might go higher, but I don't know. I'll have to ask Isaiah, my brother, about that. Katina Inu. What is the ticker first so we can look it up? Amazon is the only giant that hasn't had a significant move in the past 12 months. It is a massive wave coming, in my opinion. 100%. Dimaj, I agree, because Amazon, everybody else has moved up pretty sharply. Amazon's been holding back. Amazon's also going to give us some insight into the consumer, it's like Shiba? Hell no. If it's like a Shiba coin, no, hell no. Nah, bro. Don't chase that trash. Just tell your friend to buy Chainlink. Watch our videos on Chainlink and our research. Do not chase Shiba Inu. Hell no. It might go higher, but don't do it. You're going to wake up one day, it's down 80%. Raul Paul says all-time highs by 2024. Okay, Chavez, 100%. I'm with you on that. All-time highs, if we're going to get to all-time highs, I think the market needs to capitulate by November 2nd, 3rd, 4th, which is going to be somewhat into next week, at the end of next week. We are digesting a lot of negative news here in the market. It's not even that negative, bro. We're going to go over the macro, okay? A lot of misinterpretation, a lot of fear in the market also. I hope ENPH earnings coming out. What up, Prayer Kid? Trying stocks control estimate for crypto, just pump and dump. Shiba Inu is a pump and dump. Yeah, I agree with that. So anyways, I hope the bears are here. By the way, again, I'm going to be hosting, what's his name? There's a guy on TikTok. He has a lot of followers. He's a macro bear. You might want to hear what he has to say. This will be at 3 o'clock. Because he only has a 30-minute window, so 3 to 3:30 my time, which is going to be in about 2 hours. So in about 2 hours, I'll be back just on TikTok, not on YouTube, and I will be. I want to debate him, but I don't know if we have enough time for that. Let me just see what his view is, and I'm basically going to counter all his bearish views. He's going to feel right because obviously the market's down right now. Okay, Doifer, you should introduce your brother to his friend. I don't know what you mean there. What do you mean, Doifer to his friend? Oh, his friend. Yeah. About the Shiba Inu. Yeah, nah. PI in bounce off bottom, 35 internet thing. After see you at 185. Dang, bro. What is that code for you're bullish? I don't even know what that means, Doifer. PI, those are probably cryptos, huh? A prayer kid. I was a bear before the bears. You guys tell me to pray a month and a half ago. Seems like prayers worked. Yeah, I guess it just depends on what kind of bear you were. I'm not a structural bear. Obviously, the market got overbought and it sold off. So, hey, shout out to you if you made money on that. I guess I was wrong about the trend. The trend did break, but I'm not a structural bear. I still think we have a Santa Claus rally. Okay, maybe it doesn't get to all-time highs, but I do believe the rally is coming. Maybe it doesn't come till a little later. I'm still going to stick to that. By November, right? By the beginning of November, if the market is lower from here, then I'm wrong. I'm wrong. But I see a big setup for a rally. We're going to get through that. Stay tuned. PI is a stock. Okay, PI is a stock. I don't know what these stocks are. Look at it's based on game kind of coin. Yeah. Now, listen, you've seen a lot of these coins are trash. They're not going to recover. If anything does happen, they're screwed. You could get into them, but I wouldn't. I'm not going to. No. Not at all. So let's see what Amazon had, because this is a mega cap that's going to give us more insight into the economy going forward. EPS surges, revenues up 13%, AI driving momentum with customers. Listen, Amazon might save the market here. Amazon might save the market here. We still got Nvidia. We still have Apple earnings. We got through Tesla. That was negative. We got through Google. Google beat. They were pretty positive. It was their cloud growth that wasn't as great. Microsoft crushed it. Meta crushed it. They just had some negative spend, but most of the time they crushed it. The listen, stocks are crushing expectations, okay? Not all of them. There's some crushing of expectations here, but there's a lot of fear. The market needs to digest the macro. They are worried about what's going to happen. Plus, what do you think when the, GDP is higher than expected? Let me show you guys this, right? So we went over Amazon earnings. If anything new comes out, then we'll go ahead and touch upon that. But fear, 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 sell, sell, sell. That's what you're told. The market is extremely oversold. Let's go over this narrative, okay? Actually, let's just stick with this. Let's go to SPY. Let's go to the S&P, okay? I want you guys to take a look at this. If you're not a technician, you're probably going to be confused here. But this RSI is oversold, okay? Let me close this out. We're oversold. We broke the bull trend. Don't get me wrong. We did violate the bull trend, okay? It was somewhere right here. Okay, this was the bull trend. We violated that. And it's looking pretty bearish. But technicals are not everything. Also, you have a bounce here. Okay, the RSI is extremely oversold. It bounced here. We're oversold again. We're going to get a bounce here. The market is selling off into the Fed's preferred inflation gauge. Today, we got good news. There's no recession. GDP is at 4.9%, crushing expectations. Crushing expectations, okay? I'm being a little exaggerative here, but, there is no recession. You're going to have to hope for inflation being really bad or the consumer really falling off a cliff. And we can go over the consumer. We can go over employment. Employment is still strong. Okay. So the market did break a trend. So here's to the upside. The market broke this trend earlier and recovered. So we can still recover from a trend break, but you do need the macro, which is why we're going to switch to the macro. Stick with me. Okay. What do we got here? If you want to look at the data for yourself, just go ahead and check out my Twitter. I have it on my Twitter here. Let's see what we got on Twitter. Okay. So we got, first off, here's what we got for the macro. Okay. I got this all on the Twitter. Here's your macro outlook. The ECB, the European Central Bank, just paused rate hikes for the first time in over a year. Okay. So they're pausing. Okay. They're pausing. What do we say? When economies weaken, more liquidity. When you pause rate hikes, the expectation is the end of the drain is near. The end of the hiking is here. 30%, a growing number of central banks are ending the rate hiking cycle. Okay. Liquidity is coming into the market. China is leading that. They're liquefying their, and you can look at this article from Bloomberg. China has been talking about increasing liquidity. This mostly goes into crypto more than it does. Either way, global liquidity picks up. Equities are going to pick up, especially when you get earnings beats like Amazon, like Meta. Meta has how many billion active users? Are you kidding me? Like, you're not going anywhere, right? The creator economy is real. Here's the, also Japan is back to yield curve control, more liquidity. US economy, okay? GDP came in much stronger than expected at 4.9% versus 4.3%. Let's take a look at the charts. Bro, that's not the charts. Let's go to the calendar. Let's take a look at the charts for GDP. This is the quarter over quarter. So we're coming in at 4.9%. Pretty big upside move, right? For 4 quarters, we were declining. Boom, big upside move. And this is the third quarter. The fourth quarter, I know people are saying it's going to be weak, but it is Santa Claus rally spending. You do have fiscal. You have government spending. You have the Inflation Reduction Act. You have the CHIPS Act. You have the infrastructure bill. $1 trillion of stimulus coming in. Manufacturing's turning up. Seasonal jobs, seasonal spending. I think GDP is fine. Okay. So the next question is, well, does that make inflation go higher? Well, and we're going to get more inflation tomorrow. PCE prices. Okay. This is PCE prices. Where is it? Core. No, we're looking at core. PCE core prices right here. Okay. These are core prices. This is what the Fed is focused on. Came in at 2.4%. So while GDP is climbing, core inflation is falling. Excuse me, on a quarter over quarter basis. Great setup for the macro. Okay. Durable good orders. These are the durable good orders are, goods that are basically manufacturing and goods. They are, so refrigerators, whatever. I don't know if we're buying refrigerators, but that growth is up. It crushed expectations. It was expected to come in at 0.2, came in at 0.5, 0.5% versus 0.2%. So we're up here. Initial jobless claims. Oh my God, the economy's falling apart. No, it's not. Jobless claims are very low. Okay. I got a whole chart on this. Look how low the people have jobs. They're fine. And we're going to get the real data tomorrow. I'm just showing you guys what we're seeing here. Pending home sales, those are probably still negative. They are starting to recover a little bit. So you're seeing pending home sales recover regardless of high rates, right? That's pretty, that kind of gives you insight into the economy going forward. So that's the U.S. economy, right? The macro forces, there's a 98% chance the Fed does not hike in November. Look at the CME data, 98 is probably at 99%. The Fed is not going to hike. That the market just wants to see the Fed not hike. It is pricing in no hike. If we get surprised, market gets crushed, but I don't think they hike coming November 1st. The dollar is up, okay? You don't want to see the dollar up. This is off of escalation. It might not even be escalation. The dollar could be up, okay? Now let's take a look at the dollar here. The dollar could be up because people are selling stocks. And when you sell stocks, you settle or you cover into dollars. So the dollar might be up. It's not like there's a lot of buying pressure on the dollar. And what do I mean by that? Well, let's take a look at the dollar really quick. Here we go. The dollar is up. It's holding that level. I don't want to see the dollar above 105.50. Okay, we are above the 105.50 level, which I really don't want to see. We don't want to see that because historically this was the support. Look, this is our support. We broke above that level. And what does that mean if you're a newbie? It means the dollar is strong. A stronger dollar is going to be a headwind for equities, for crypto, for risk assets in general. A strong dollar is not great, but it's not negative for the economy, okay? It's not so negative for the economy because people can park their cash in the money market funds and collect 5% interest, supporting growth further, mostly rich people, but yes. So the dollar being up is not great, but it hasn't made a new high yet, okay? On top of that, there's a bearish divergence. So I don't think there's a risk-off dollar move here. I don't see the risk-off dollar move, or else we would see this buying pressure pick up. The buying pressure is falling, so I think the dollar moving up is literally people settling, right? Selling off their stocks. Look at the stock market. And the dollar moving up. I could be wrong, but that's my guess, is that equities, there's a caution risk-off move out of equities, and the dollar is therefore benefiting from that. But hey, if we get good PCE data tomorrow, we could see a huge rip rally and the dollar comes back down. The real risk for the dollar going high is rates going up, but we're not making new highs on rates now. This could keep going because of the mortgage situation, because of the 30-year yield situation. This could keep going higher, but it also keeps the Fed from hiking rates because the bonds are doing the work for the Fed. What do I mean by that? How is that possible? Let's take a look here.
There are those who suggested, including some colleagues in the Fed, that maybe the bond market is doing part of your job for you. Is that the way you see it?
I would say it this way. The whole idea of tightening policy is to affect financial conditions. And to the extent higher bond rates reflect that they're producing tighter financial conditions right now. So that's how monetary policy works. That's literally how it works. In principle, is
that's literally how it works. That's what he said. That's literally how it works. So he's telegraphing. We're going to pause here. Does he pause in December? It's going to be data dependent. Okay. But the point is, you know, 30-year yields are not moving higher. There's some bearish divergence, although I don't know if I trust this, because if there's a huge short squeeze, you know, yeah, if the easy way to track this, just look at TLT. Okay. For conditions to ease, you want TLT to go up. TLT is showing very strong. This thing's going to break out to the upside eventually. It could happen tomorrow. I think tomorrow is, I'm going to give it a 75-80% chance that PCE data, inflation preferred from the Fed, comes in better than expected. Huge bond rally, huge crypto rally, huge stock rally. Dollar comes down. Financial conditions ease. The bears get squeezed. They cover. Okay, and that data comes in early morning, 9:30 a.m. Eastern time. Back to the thesis, back to the data here. Okay, so yeah, dollar is not that strong. Rates are down. Oil is weak. That's the positive. Oil is still the most important chart in the market, because as long as oil doesn't make new highs, doesn't break out over 100, look at everybody expected oil to be up over 100%. I mean, over $100, it's not there. Okay, it's not there. It didn't get there. If it does, we're worried, but it's not. Okay, as a matter of fact, oil is down. Okay, and you got to think about this in terms of inflation. Oil is actually down for the month. What does that set up? That sets us up for the next inflation print to be much lower. Really, the market is much smarter. It's going to price these things into the future. So oil is down, bro. Look at this. I've been tracking oil month to month. I get up, down this month. And we have 7 days left, so it's not over yet. Don't get me wrong, it's not over yet. But if we end lower, you're basically getting the input for headline inflation On the energy side, down. Okay, from 90, it came out at this month, it came in at 90, ended at, well, if it ends in the 80s, low 80s, well, inflation goes negative for the month when it comes to oil prices. That's going to be a huge beat. It's going to relieve a lot of investors because the real battle here for the Fed is inflation, is not growth. People keep telling you the Fed wants to crush growth. No, they don't. They want to crush inflation. And so far it's been working, and if productivity picks up, we're going to be doing a pretty good job. Look at natural gas. It's going nowhere. It did spike and it came back down. Energy inflation is I don't want to say it's non-existent, but on a month-over-month basis, it's not climbing. Okay, so keep your eye on oil. Back to the Twitter, or the X, sorry. Earnings. Earnings are still strong. Okay, Tesla's the only Magnificent Seven stock that sucked, and it sold off. It paid for it, right? But I think what's happening, and we're seeing the sell the rumor, earnings are weak, right? Earnings are going to collapse. This is sell the rumor. So whatever the rumor is, sell, sell, sell. We're seeing that. We're seeing the market sell, 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 and then buy the fact. Once earnings are done, once Apple reports, okay, you're going to get earnings. Investors are going to wipe the sweat off their heads. Okay, earnings are still pretty square. Also, we just got GDP square. Okay, we're good. We're great. Earnings are not falling off a cliff. Markets will recover off earnings. They're just waiting to see what the Fed's going to do. Okay, they want to see what the Fed's going to do. So let's take a look at what we're looking at for tomorrow. Okay, it looks like what I have here. It looks like the S&P 500 is pricing in a bad surprise from core PCE. That's tomorrow. If not, huge capitulation to the upside. Inline data, anything lower would solidify. Okay, anything lower on PCE will solidify the end of the hiking cycle, and yields can ease further. If yields do ease because PCE came in lower than expected or in line, the Fed does not hike. Okay, yields can ease because they're going to say, okay, the Fed's definitely not hiking. The dollar eases. Who knows what oil does, right? Right now it is tame. Stocks go higher. We capitulate, and it'll be a violent move, in my view, just like it was 2 weeks ago when employment came out. It'll be a pretty violent move because everybody's positioned short. There's a lot of buyers waiting to buy these premium stocks. They're doing pretty good. Okay, and oil is the wild card, but it is pretty tame at the moment. If it ends the month lower, well, future expectations of inflation are down on top of core already falling. Yields are easing at the highs. The dollar showing some bearish divergence. We went over that. Great macro reversal setup. Okay, so what are we looking at for tomorrow? The expectations for core PCE month over month are at 0.3. I like the high expectation because if we come in lower, it's going to be a reversal. Personal income, personal spending, probably not as important. That could make a difference, but it's about inflation. It is about inflation more than anything. Core PCE year over year, due to coming at 3.7, hopefully we can come in line or below that. Now, PCE year over year, month over month. I mean, I don't even think they've taken it into account energy prices for PCE. So that's going to be huge. Well, there's no recession, guys. That's the point. There's no recession. The two biggest plagues to the market right now are earnings are going to collapse. We're not seeing it. Growth is going to collapse. GDP is higher. Not seeing it. Inflation's going higher. Core PC is down. But the market is down. So, you know, you kind of go with how the market looks. And so people are scared. They're freaking out here. And especially making new lows. But going back to the technicals as we went over the macro setup, I mean, obviously, when you're down this big, you get a bounce. Okay, let's go ahead and look at the history of the market. Okay, back here in September of 2022, when we got this oversold, we got the big bounce. The S&P went up from the lows. Okay, it started going negative here, and it bounced. Right, it bounced what, 15% from those lows. Last time we came down close, we bounced up probably like 15%. Came here, small bounce, but this is when inflation was roaring and the Fed was tightening the hiking cycle. They were tightening. Now the Fed is pretty much done, and the market is sniffing that out. So we're down. Dude, we're going to get a relief rally. We might even decline tomorrow a little bit in the morning. I expect the algos to react pretty crazy, and then we'll see what happens after that. I'm not saying the bull market starts tomorrow. I just think it could start tomorrow, but you really need to see what the Fed says because they're using rhetoric to get the bond market tight. Okay, I know you guys have a lot of comments. We'll get to those comments. I just wanted to finish my rant there. So let's go ahead and go through these. Do we bounce in the next week or two? We not getting all-time highs. We might not. We might not get to all-time highs. This was a pretty dramatic sell-off. Prayer kid. We do get a bounce in the next week or two. I still think it's on the table. You could get a negative reaction to all-time highs. December could take you to all-time highs. We'll see. We still got 2 months. Amazon will rally then sell off again, just like Microsoft at 110. Possibly. I think it depends on Apple earnings. Amazon can rally back to 125, then sell off again. Okay, great. I'm not too much of a fundamental. To me, it's all fugazi. Probably because you can't read it, prayer guy. Dollar will get to 107. It could definitely get to 107. I could see that. Dollar at 107. I'm going to get to you guys YouTube. I'm just going to get through these TikTok comments, see where the bears are at, but I'm thinking we pop for the Christmas rally. Yeah, I think we do recover. Now, I was saying all-time highs into Christmas rally. Maybe we don't. Maybe the Mag 7 do. We'll see. It's less of a chance now that we came down this far. It'll have to be one hell of a rally. Okay, it'll have to be one hell of a rally. Man, this sell-off is BS. GDP up big time. Tech mostly beats. Yes, the sell-off, I think, is coming from fear of the war, that rates have to go higher because the government keeps printing to support Israel. Rates go higher, XYZ. But you also have the Fed pausing rate hikes. It's going to come down to his language. Core PC is going to be the most important here going forward. You cannot believe 2024 earnings will be 2023 earnings. Everybody knows we are going to contract. Okay, Hugo. Respectfully disagree that earnings are going to retract. As long as employment remains strong, I don't see earnings or GDP retracting. I'm not saying GDP will just skyrocket. It'll come down. But the market doesn't care if GDP gets revised lower by 1% or whatever. As long as GDP, as long as the market knows why GDP is coming down, right? If its consumers start to slow in February and March, which I do expect, obviously Santa Claus rally, seasonal jobs might not be there, but you have fiscal policy. You have more manufacturing. You have now the war, which also might be inflationary, but it also means what? More manufacturing jobs to create weapons, to create XYZ, more jobs, okay? More jobs. So spending will not fall off a cliff. There's still $1 trillion. Households are still richer than they were. Credit card delinquency rates are at historic lows. Okay, credit card debt is high, but per income, it's low. The big thing is commercial real estate could collapse, but then that goes on to the banks. With the Fed save the banks. Okay, let me slow down. Commercial real estate and auto loans are at risk here. Okay, those are the two biggest risks: commercial real estate and auto loans. Those are on banks' balance sheets. If the regional banks crack, what happened last time, guys? What happened last time the regional banks cracked? The Fed stepped in. So that's my expectation. The Fed steps in. I think people are underestimating what the Fed will do. Market's going nowhere if the Russell can't get going. Prayer kid. I disagree. Jeremy, have you talked to anyone on Main Street about their projected earnings? No, I have not. Anybody on Main Street? Okay, back to the YouTube comments. If you guys disagree, let me know. Just give me a real good reason why, though, okay? Mr. Hugo, I like Hugo. He has some pretty good stuff, but he just says, everybody knows we're going to contract. I mean, ISM manufacturing disagrees. The ISM manufacturing is actually moving higher. The manufacturing sector is picking up. So you're in this rolling recession scenario where services will probably slow, not anytime soon, right? Go ahead and we'll check out UPS earnings. We'll look at Starbucks. Services are not going anywhere yet, Hugo, they're not going anywhere yet. Manufacturing is recovering. Plus you got fiscal policy going to fuel that even further. The war to fuel that any further. The real risk here is inflation reaccelerates, which is why PCE is going to be so important for tomorrow. PCE data, right? What else are we looking at here? Do we have credit risk? Okay, my bad. Let me go to your guys' comments now. Have I bought more Link recently? Yes, I did. Tigger Media. I did buy more Link. Crypto's in a bull market. I know people, I don't say exactly what I'm doing, but yes, I bought more Link above 10. It is holding $10, so I did buy more Link. I want to get pretty positioned into this. I mean, crypto's sniffing out more stimulus. The global economy is picking up. So this is how I'm looking at Chainlink right now. Right? It is riding this EMA. And actually, I'm looking at buying more because I think that PCE data, if I'm wrong, I'm wrong. But I think the PCE data is going to surprise people to the surprise to the downside. I think investors are going to gain back their confidence, or their fears are going to kind of dissipate because they're expecting a high PC print. All right, I think PC, maybe I'm wrong. I just think PC comes in better than expected. Make sure I don't lose you guys. Small and mid-sized businesses are very pessimistic. Yeah. Dima Yush, yes. Small and mid-sized businesses are struggling to some degree. So the economy isn't going to be great, but here's what people are missing. Listen up. We're heading into a pre-election year. Okay? So you have to bet that this White House, who is known for stimulus, is not going to give any type of boost, monetary or fiscal stimulus boost. You have to assume that they would not do that. I do expect them to give some type of stimulus to businesses that are struggling, or consumer credit, delinquencies, whatever. Expect it. We're heading into an election year. And I just think you got to be a fool to not consider that that's a possibility, that they come in and help with some type of, negative growth. That's what this administration is known for. So am I betting all on that? No, I think the Fed is done hiking. I think that's a positive, because then investors look to the future and say, okay, the Fed's done hiking. Okay, here we go. So you're right, Dima Yush. Small and mid-sized businesses may be very pessimistic, but the market is forward-looking, right? And the big tech mega cap pulls the S&P and the NASDAQ, and guess what? The NASDAQ is much higher. Okay, the NASDAQ, or not, I don't want to say the NASDAQ's much higher. Let's look at the NASDAQ really quick. The NASDAQ did sell off. It is getting to oversold levels. 1, 2, 3. These are big oversold levels. It's pulling into the 200 daily moving average. So this is our next line of support. Okay, last time we supported it here. What was this? The banking crisis. So I'm not putting it off the table that banks collapse, that regional banks have issues, but the Fed, what is the market looking for? The Fed to step in, period. I think the Fed steps in. Okay. I'm going to get back to you guys on here. Let's see what we got here. By the way, bro, I was wondering, how are you so good at telling when DXY is risk off and risk on and how are you so good at telling when the DXY is risk off and risk on? How am I so good? Bruh, I was born like this. No, I'm just playing. Listen, I'm creating, I am putting together some, if you guys are interested, it'll be ready by the end of the year. I'm trying to get everything in it. I want to say the end of the year, but a course, a macro for beginning investors, for noobs, and for pros. But it's going to be a macro investor course, and the dollar is important. So I'm not trying to brag or anything, but the dollar is tied to rates and tied to risk. So to make it simple, okay, when the Fed is getting hawkish, the dollar is going to move higher, because the higher interest rates, the more valuable the US dollar becomes. The less they print, the more other banks are printing, the higher the dollar becomes. The higher rates go, not the Fed funds rate, the higher bond yields go, which are the market rates, the more valuable the dollar. As soon as stresses are gone and the economy is, I don't want to say the economy, but when the outlook is more positive, or there's more easing mechanisms, as in inflation is coming down. That's the big dragon that people are not, they're so blinded by war, rates, earnings, growth. They're not seeing that inflation is making progress. When that comes into, play, then investors are going to take their dollars in the money market funds. You have trillions. You have a record of money market fund cash. It's earning 5%. Oh, whoopee. The NASDAQ was up 40% at the highs. Now is your pullback. It's down 10%. You think fund managers, when they see, okay, clear skies, PCE is down, inflation is down, the Fed is done hiking. Okay, the Fed is done hiking. Earnings growth is still positive. It's actually leaving the earnings recession. GDP is revised higher. The Fed is going to keep printing. If the consumer falls off, possibly fiscal policy comes back into play. They're not going to collect a 5%. It means nothing. It's trash. 5%. Oh, whoopee. If you got to make a purchase, great. But 5% ain't going to do shit. Okay, when these companies are moving, when the S&P is up 20% on the year, it's not even a bet. Crypto's up 80%. Bitcoin's up 100%. That cash will come right back into the market, is what I'm saying. So, anyways, did you see ENPH earnings? No, I did not. Let's see what the stock looks like really quick. Probably looks like trash, huh? I feel bad, man. These Ian Pieter guys got smashed. Just hold tight. There is more fiscal policy. I don't know a whole lot about Ian Pieter. I'm not going to make a lot of comments on it because it's not something, there's a lot of stocks out there. And I really don't know too much about it other than energy. It's an energy play. It's a solar name. So I don't want to say too much about something I don't understand. What else do we got here? Bukowski, I'm expecting a relief rally up to 4,400. Yeah, that makes about sense. Something doesn't slip an Amazon conference call like last time. I think the S&P goes back to 4,400, tries to fill that gap again. We are definitely going to bounce. The question is, can we hold 422, right? When we do bounce off this oversold RSI and the improving macro, do we get back above 420? If we don't, I'm going to say, damn, we're getting rejected by the 200 daily moving average. And we can't get above that previous important level. That'll be an issue. But there's a lot of news to still come. The biggest news hasn't hit, which is Fed PCE, right? The Fed's preferred inflation gauge, Apple earnings, to sum up the earnings season for the most part, the big earnings. Okay, so that's not even in that's still in the pipeline. NASDAQ across 50 years looks like Ethereum. Yeah, NASDAQ's a monster. Over time, NASDAQ goes higher. Plus, I have some posts that I was talking about earlier. The market can still go higher on higher rates. From 2016 to 2018, Fed was hiking rates. Bond yields were climbing up 180 basis points each. Market went higher, exploded. 1994 to 1998, rates were above 5%. The bond yields and the Fed funds rate were holding above 5%. You can go look at my Twitter. I have it on there. I'll pull out the slide deck if I need to. Market went higher. Okay, it still went higher. And there was a labor shortage, but that's where tech comes in. That's why the Mag 7 will continue to be the Mag 7, because there's a labor shortage. And you have some immigration coming in at the border. You have some immigration, which is helping with wage pressures and wage costs and productivity. That means more income, more spending. Okay. The gig economy is maybe unaccounted for, which is like Uber drivers, Lyft, DoorDash, Cart, whatever it is. They're still spending. So I just don't see a recession coming. It has to be a black swan. Microsoft, what up, Carbides? Microsoft has 2x the market cap of Amazon. We need Microsoft, Apple to pump. Google is slightly bigger than Amazon. So if anything, Amazon holds the market but doesn't pump it unless Microsoft follows. I really think it's going to come down to the PCE data and what the Fed says. The market wants more certainty. The war sucks, but alone it's not enough. Do bond yields, long end bond yields, collapse? Right? Do they collapse? I don't know. So macro forces, macroeconomic data, and the technicals plus the fundamentals. The fundamentals look good. Earnings growth is positive. Growth looks good. The macro forces are bad, which is high yields are still elevated. The dollar looks to break out. Oil is easing here. It's not bad. Triple B spreads are okay. The VIX is okay. The VIX is at 20, but it's not, where's the VIX at right now? We didn't even talk about the VIX. The VIX is at 20.67. It's holding in there. Didn't make a new high. We'll see. Triple B spreads, credit risk, not spiking. I think you're going to get a rally here going into these printing numbers tomorrow. That's my guess. What else do we have? EMPH earnings tomorrow. Oh, okay, cool. They missed. Shout out to you guys on here. Appreciate you. Dollar up because of foreign currencies. If foreign Hermes, dang, you got a crazy name. Trismeg, bro, where are you from? Hermes? Anyways, yeah, if foreign central banks are printing money, China, the dollar goes higher. It's not a dollar pressure. It's more so, it's like a third, not a third event. It's like a second order move. It's not a first order move is, oh my gosh, global uncertainty, rockets, nukes, boom, dollar goes higher. That's not the case. Dollar is up, and plus the market can move higher with the dollar. It's a low probability, but it is possible. It has happened in the past. Dollar's up because the rest of the world is tanking. Yeah. Euro down. Okay. Yep. Bull flag. What'd you say? Oh no, it's a bull flag on DXY. Yeah. DXY is a bull flag. But like I said, I don't think it's like a super risk off dollar. It is pressure. Don't get me wrong, but tomorrow's data could really turn things around. If it comes, yeah, look at, that's a bull flag. Yeah, it is. It's bullish. Like I said, the macro forces are not great. The macro looks good to me. The macro forces are really a headwind right now on the market. The The left guy sounds like Jon Stewart. I don't even know. I know who Jon Stewart is. I just don't know what you mean by the left guy. That left guy. The left guy. I see it too. Okay. Do I need to read all these? What would you say? 4-hour candle on DXY does look like a bearish engulfing candle. Could see DXY move down more. Yeah, that's going to be positive if DXY does move. As of today, the dollar is the strongest macro force. Oil's weak. And rates, I don't want to say rates are really weak, but they're not making new highs. So yeah, this is a bear. I mean, I think it's the daily chart where you really see the bear flag. You see RSI falling and you see the dollar making new high. Nah. Right. So I think that's the case here. Buy the dip on Murphy oil. That might be a good dip buy. I don't think energy disappears. I just don't think it's looking like a big macro headwind for the market right now. I'm in position. What else we got here? Colder weather projected Midwest next week could be adding buying pressure to nat gas and other heating fuels. Thanks for the insight. Herms. How would the dollar react tomorrow on PCE, bro? If PCE comes in lower than expected across the board, the dollar is going to drop. If it comes in higher than expected, the dollar is going to move higher. It's pretty simple. The exact numbers, I'm not sure. I'm focused on core. Wouldn't be surprised to see an end of the month squeeze starting next week. I wouldn't be surprised either, Herms. So GDP coming in that good would mean DXY up. Yeah, GDP coming in strong should actually push the dollar higher, which the dollar did move higher today. But on the flip side, PCE prices quarter over quarter were down to the lowest they've been in 2 years at 2.4%. So that's the positive there. All right, let me jump back over here. What up, Big Man's coming? Shout out to you. Haven't seen you for a while. Okay, let me try to catch up to these TikTok guys. And if you're on TikTok, jump over to YouTube if you want me to read your comments if they stick, so they can stick. So I haven't talked to Main Street. I got that. Small business can't borrow for growth, so the market isn't going anywhere until that happens. Mega cap earnings is not enough. They're looking for very high projections, which they cannot. Here's the part. Under the hood, manufacturing is picking up. Okay? New orders are picking up. So yes, this is a rolling recession, by the way. It's a rolling recession / expansion, which really means that there is weakening and then there's strength. There's some businesses are weakening. I guarantee you, every small business that has anything to do with industrial growth, right, manufacturing growth, is not weakening. Certain areas of the market will weaken and others strengthen. You guys act like the market needs the whole economy to be full-fledged stronger. If that was the case, we wouldn't have broke out, right? The S&P would have never broke out to all this far earlier in the year. Why did it break out so far? It doesn't matter. What it needs is, it looks into the future. And right now the S&P is looking 9 to 12 months into the future. When the Fed removed rate hikes, when the Fed removed rate cuts in 2024, the market started to sell off because in a year from now, the market is saying, oh shit, we're not getting easing conditions. So it's looking ahead, right? It looks far ahead. I think investors make a big mistake of thinking how far ahead the market can move up. The market bottoms 6 to 9 months, and in this case, 12 months before earnings bottom. Earnings are barely bottoming, meaning revisions are higher for the first time, and the market's been up the whole year. So the market is forward looking. It is not the economy. Okay, even though the economy does affect it, the economy is like the engine. How good is the engine? In what condition is the engine? The engine doesn't need to be 100% for the market to go higher. The engine just needs to not collapse or fall apart. Okay, if it's weaker, maybe the stock market isn't as strong in certain segments. There's always a bull market somewhere. Right now, it's in crypto. It's in, I would say, industrials. I would say, certain names are still in the bull market, but I mean, it looks pretty bad right now. Let's see, what else do we have here? The Russell 2000. Yeah, and the Russell 2000 is crappy, and that's because the Russell 2000 companies are not profitable companies. They have debt. They have to refi their interest rates a lot sooner, and so because of the type of companies they're in. So I don't expect the Russell to perform. I think the bottoms are getting bought though. Let me see. Has it made new lows? Oh goodness, it's at risk of making new lows. But look how oversold it is, right? If it was making new lows and at the top, I'd be a little more worried. But this calls for a bounce in the Russell. This is extreme bullish divergence. This is why the technicals matter. Okay, the technicals matter. The price is declining and buying pressure is starting to pick up little by little, but it's starting to pick up. So I think people are dipping into the Russell. The market wants to see the end of the rate hikes, of course. Look, like I said, this is not a full-fledged bull market rally. It is being carried by the premium stocks. It is being carried by the stocks who have low debt, higher margins, earnings growth is going up. They're a new technology. They benefit from the Inflation Reduction Act, fiscal. They benefit going forward. They benefit from more liquidity. They benefit from they benefit in China if China comes back. So it's not a full-fledged bull market rally, but that doesn't change the fact that the premium stocks can move higher. And I expect NASDAQ to lead as they have been. Tesla nearing 200. Yeah, Tesla at 200 is about the last line of defense for me. And if it can't hold above 200, I'm shorting Tesla. And then I'll buy back. They sold off Amazon, Microsoft earnings. And Dima, you're right. But guess what? On the last earnings, stocks went up and then they sold off. So what I'm thinking is happening right now, and I could be wrong, is stocks are selling off. It's sell the rumor that earnings growth is weak by the facts. Once we get all the earnings in, the facts are in, earnings are actually rising. It's buy it. As long as inflation is not moving up and the Fed did pause. So there's a lot of, how would I say this? There's a lot of if-thens in the market. It's not just full-fledged, oh my gosh, rates are higher, the market's getting crushed. There's a bunch of different variables to be measured to make your guess. Nobody guesses the market exactly. You don't know exactly what's happening. You just got to add the variables together. I'm providing the most variables you're going to hear, right? Maybe I'm wrong. Maybe there's somebody else, but technicals, fundamentals, macro, economy, put them together. You decide what's going to happen. I'm just going to give them to you, and I'm going to give you my bias. I'm not going to pretend like I'm not biased. I am bullishly biased. Okay, Santa Claus rally. And for the rest of the year, I don't see a recession coming at all unless a black swan hits. Obviously, nukes, China invades Taiwan. Unless there's a black swan, I don't see it. I don't think that credit card debt at all-time highs is a negative catalyst unless it's all about the interest payments and people still have income. If employment falls off a cliff, if jobless claims spike, if employment falls and jobs go negative, right? If we start seeing that, then I'm going to say, oh shit, there's not enough support for this economy. That's just not the case right now. Think retail stocks on earnings, GDP showed consumers are spending. Yes. Inflation went up. GDP went up. Inflation went up. Maybe I'm missing what you're saying here. Because of more realistic projections, which is down. Inflation went up. GDP went up. And everybody gets inflation wrong too. Inflation is driven by excess demand and loss of supply. We have more supply, and demand is, you could argue it's not as excessive as it was, but you have people coming into the workforce, right? More labor force participation means more production, more supply. It's just like the housing market, okay? The housing market, when there's a lack of supply, prices cannot fall because there's not enough supply. When the Fed actually cuts rates sometime in 2024, housing prices might actually decline because now you have home builders creating more supply, and then existing homes, more supply because people want to move now, right? So it's all about supply and demand. It's not just, printing higher from inflation. It's all about where's your productivity levels, how much supply is there versus demand. Jobless spike and credit crunch hits. Okay. I mean, that's a fair enough assessment. If there's going to be a credit crunch, I mean, there was a credit crunch. It was literally March of 2023. The Fed stepped in, right? And that's what I think is going to happen again. Let's see what we got here. Bukowski, how in the hell are you guys doing 4.9% growth? That's some emerging market type. How are we doing that growth? Americans spend, bro. If there's one thing Americans do, they spend. And especially into the holiday season, most people are trying to get those deals. They've been traveling. There's a lot of wealthy individuals. There's a gig economy, which is probably not being tracked accurately. a gig economy as in Uber, Lyft, all these jobs that are just not being tracked. People are still spending. There's excess savings, $1 trillion of excess savings, which when is it going to run out? Well, it might just stay there because it might trickle down, but not far enough. Student loan repayment. Well, guess what? Those people don't actually have to pay back student loans until next year. Like the institutions in the US will they're going to incentivize spending to continue. Okay, they're going to just incentivize spending to keep up. So commercial real estate and auto loan delinquencies, that's the real issue. Is it the biggest issue? Not really, because the housing market is not falling apart. It's frozen. If housing was down, I'd be more worried, but people could take loans out and move higher. They can take loans out or whatever it is, whatever the case is. So that's the Russell. Let's see, this is okay. Yeah, we got that. All right. Inflation up probably. Okay, let's see. You're buying Link at 10. Where were you at 5? Where were you at 5? Yeah, I scaled in at 5. Doifer, I scaled in. Actually, I've been buying Link for a while, but I got some at 5. I got some at 7. I'm getting some at 10 because the chance that, I'm not saying 10's a good buy, but it's like, damn, the pressure is starting to lift here. Oops, the pressure's starting to lift here. And let's see, crypto. Link is moving strong against Ethereum. Look at this. Link versus ETH. Link right now is leading. Link is leading the crypto market as far as the top 20. As far as the top 20. So it's outpacing Ethereum. It's outpacing Bitcoin at the moment. Okay. The narrative is unstoppable. Central banks, blockchain, tokenizing all their assets, literally moving finance on chain. I think 10 is barely getting started. So could it retrace? Sure. But I'll buy more. So yeah, is it oversold? I mean, overbought, yes. But with crypto, it could be overbought for a while. This is the first overbought signal. I think on the next move to like 12, 50, 13, 14, 15, then I'll be cautious and maybe sell some. I don't know if I'll sell some. I haven't decided yet. I really want to see how the macro plays out. It depends on the macro. This is not a clean macro. It's not a very clean macro setup. But just because you hear, oh, the macro is not great, everybody thinks the market has to collapse to 50%. Would you say you're bearish on the dollar? Am I bearish on the dollar? I would say it depends on the time frame. If we're talking over the next 6 months, I would say I am bearish to neutral on the dollar over the next 6 months because the Fed is done hiking. That's why. Am I super bearish? No. I'll get bearish when the Fed starts to signal a cut and inflation goes lower. If inflation collapses to 2%, the dollar is going lower. Because, that's just what I think. So I'm kind of neutral on the dollar, but I think it's going to go lower eventually. I don't think it goes to freaking all-time lows like people say. It doesn't make any sense. So it depends on the time frame you've seen. How can you tell from the DXY chart where it would be risk on? The DXY chart, it's going to be the big levels. So like the big level for the dollar, put on the weekly so you can see. Actually, let's throw on the monthly chart. Okay, now structurally, the dollar has been moving up. You can see it structurally has been, lifting. So the big breakout is like what, 103? That's where it kind of supported earlier. I think it comes back down to 103 eventually. But for the most part, above this resistance, which is 105.50, that's risk off. It could run back to, run back to the highs, but it's not a risk asset. I don't think it runs back to the highs by itself because it's going to be impacted by policy. But risk on, it gets under 105.50. So we're looking at the weekly chart and simply it's just simple resistance, right? You got resistance here early in the year. You got some wicks here, right? There's a little bit there. Didn't get as high here. And then now we're showing wicks literally at 105.50. So somewhere between 106 and 105.50. Below that level, dollar is going to be risk on for assets. Not dollar on, risk on for assets. As the dollar moves up, it's risk off. As the dollar moves down, drastically, it's risk on for assets. All right, where are we at? Are we going to see a Santa Claus Valley? Is that a joke, or rally? I think so. I think if we get the Santa Claus rally, it's going to have to be within the next 10 days, right? November 1st, 2nd, whatever that is. IWM hit my Head and Shoulders target. Adding shares for the long run. Hit your Head and Shoulders target, huh? Oh, the break. I see what you're saying. Are we talking about the breakdown? Hit the breakdown level? Yeah. There's a lot of cash on the sideline. Like it's I think the market can recover pretty strong. KRE got bought hard today. Let's see, where's KRE? Yeah, and KRE is one of those canaries in the coal mine. If KRE really breaks, like, the Fed's going to come in, right? This is kind of the canary. So big bid on KRE today. Market rallied at the very end of the day. Let's kind of see what that rally looked like. It's pricing in the worst of earnings, okay? And it's pricing in, a bad Fed, a tight Fed, and it's pricing in, bad CPI. Pentagon sends 900 troops to Middle East. Uh-oh. And if this war accelerates, you just look at oil. If oil goes higher, it's going to be a problem. If it doesn't, it's not going to be that big of a problem for the market. But there will be more printing, so 10-year yields could be higher, but that means more stimulus because eventually the U.S. government needs to be funded, and the more the 10-year goes up, the more debt is being dumped on the market, and the Fed's going to step in at some point, and they're probably going to have to capitulate on inflation instead of saying 2% target. And we all know PCE, we saw the data. If you were paying attention, PCE, we talked about this on Monday. The historic level for PCE is at 2.8%. It's not 2%, it's 2.8. So why is the Fed doing that? I think because the Fed is using their rhetoric to get the bond market tight for it, to do the work for the Fed. Exactly. Be greedy when everybody's fearful. Yeah, we'll see. This was a very extreme sell-off, but look at that rip higher into the close, and then it sold off. There's just a lot of uncertainty right now. I get it, but where is the pain? The path. The pain is. I think the pain is higher, not lower. That's what I would say. So yeah, I think that wraps up. I'll take a couple more comments. I'm getting back on TikTok to speak with. Damn, what's his name? Let me pull up so you guys can see. He has a pretty big following. He's a macro bear on TikTok. Johnny. His name is Johnny. Johnny Sursdy. I don't know. Johnny Sursdy. Anyways, I'm going to speak with him in about 40 minutes. If he makes it, I'll be on TikTok. He's a macro bear, so we'll hear a bear argument. If you guys want to check that out. What would you say is probably what you're saying. Transportation sector and home builder sector says about the state of the market. What is the transportation sector? Let's see. Transportation is going to be part of industrials. But what's a better ticker for transportation? There's probably a better ticker for it. What does it say about the state of the market? Let's look at ITB. I think ITB is saying that the demand for home building is muted until we get a clear rate path. So, yeah, I mean, I don't know. I don't know exactly. I'd have to think about it. Oh, DJT. Well, I'll say this. Airlines are still, wait, is that it? That's Trump Hotels. DJT? Trump Hotels? What? Is this really Trump Hotels and Casino? What? What is this thing? Isn't it Jet? I thought Jets. That looks like trash. Global Jets ETF. Oh, Dow Jones. DJI. You mean DJI, huh? DJIA? DJIA? How about the Dow? Let's just look at the Dow. What is the Dow saying? I mean, I think the Dow is saying that I think we have to wait till after the big macro data, really, to be honest with you. As of now, it's saying, hey, if energy costs continue to rise and the Fed keeps hiking and the consumer falls off a cliff, which is not really the, really the big thing right now. I think it's just saying, hey, growth is going to be weaker. It's a mixed signal. I mean, it's a mixed signal. There's a lot of worries. I'm not saying like don't be worried at all. I just think it really depends on the PCE data coming in. If the ECB is pausing, doesn't this mean the euro goes down? Yes, if the ECB pauses or starts cutting, it doesn't mean there's other factors, there's other forces, but it does mean that the euro should weaken against the dollar if the dollar stays tight, right? Okay, so what does this guy say, Michael? The world has borrowed in US dollars for the last 10 years. US rates could cause a run in the dollar. That's a good point. 80% of world debt is in US dollars. So if they don't pay back their dollars, the dollar is going to get stronger. There is a scenario where the dollar strengthens, stocks strengthen, and who else is it? Crypto, I guess. There's a scenario where everything strengthens together. So keep that in mind. Thoughts on Apple earnings, Hassan? I mean, honestly, Apple looks set to break out. Like this, it's literally just pulling in, right? It's back to levels where it was April. I'm not familiar 100% with Apple. Like I'm not an Apple's expert on fundamental earnings. More so, I would say that China is a big deal for Apple. So what is the demand for China? They might be weak in in a couple segments. So I'm really not sure. Apple services are probably going to be stronger though. So I think they beat earnings. I don't expect Apple to miss earnings. If they buy back shares, Hassan, that's going to be a big signal. Apple buying back shares, removing. Oh, DJI and DJ. How come that didn't pop up on my DJI? That's weird. It doesn't show up on my trading view. Let me put it on. Let's go ahead and put it on. Oh, that's weird. I see. It's on. DJI is on trading view. Or I'm sorry, it didn't show up on my Thinkorswim. It was on the TOS. What does it tell you about the overall economy? The Dow. Here's the thing. A lot of the economy is being driven by technology also. So I think the market is kind of shifting, and it's hard to understand like technology is taking over everything. So manufacturing is picking up. It's a leading economic indicator. Construction spending is picking up. I think the Dow is you know, it might be negative, but it's still above the 200 moving average. Oh, I didn't even show it on here. The Dow is still above the 200 moving average, so the overall economy lags, and the Dow might be pricing in the worst case scenario, maybe commercial real estate break, retailers breaking. But again, I think you need to wait till earnings are over. Visa, MasterCard, all these companies have been reporting very positive. The banks did pretty well. Let's see what DJT is. DJT, right? Oh, what is this? Transport. Oh, okay, there we go. Dow Jones Transportation Average. Yeah. Okay, yeah. This is this tells you a lot about the economy. Big reversal here. Big reversal. I still think this is a lot of uncertainty about the war, and rate hikes going forward. Because if the Fed does pause here, bond yields come down. I think really, let me just put it this way. I think this is a reflection of very high bond yields. I think that's what it tells you. The cost of capital is high for businesses that have to refi. That's what it tells you. If you're locked in low rates, you're good, which is why there's a bull market somewhere. But that's actually a really good chart, DJT, the transportation average. That was like the old way of looking at the economy / market. I think you have to look at that and look at the Qs, because let's keep it real. Most of the GDP is coming from tech. Most of the GDP is coming from tech. All right. Well, look, I'm going to take a little break. I'll be back on to talk with Johnny on TikTok. This will not be on YouTube. This will be on TikTok in about what? This will be at 6 p.m. Eastern time on TikTok. I'll be hosting him. We're going to talk macro. I'll see if I could challenge him a little bit, or if he could challenge me on some thoughts, on some charts. Other than that, stay strong. We'll check out that data tomorrow if I do miss you guys. All right, stay blessed. Get your workout. Stay healthy. Improve every day. And remember, what does it say? And remember, a lot of times the market prices in a lot of stuff already. What's the name of the channel? It is Jeremy Fielder. If you go to, I didn't put nothing in here in the bio. Look, after this YouTube video, I'll put in the TikTok so you can go onto it. It's I'll put in the information in the link in the description. I didn't add a description. So let me add the description. You guys can go check it out in there. I want to debate this guy, but he doesn't, I'll set up a YouTube. Hopefully after this, we can set up a YouTube, like an hour, 60-minute video where I can debate him really with charts. But for now, it's just going to be going to be talking. So I'll put that link in the description to the TikTok. Catch you guys in about 40 minutes. All right. Thank you guys for and if you guys have any pushback, I welcome all the pushback. I welcome the pushback. I'm not going to block you or trash you. Only going to attack your ideas and your concepts. I'll never attack you personally. Okay, that's it. If inflation gets to 2%, is that when the Fed will cut rates? They said that they'll cut rates before 2%. You can't trust the Fed. This is the other argument. The Fed says one thing to control conditions, expectations. It doesn't mean it is a fact. In 2021, the Fed said we aren't even thinking about hiking rates. Why not on YouTube? Because he has 30 minutes, and he has 30 minutes in YouTube. There's like a bunch of little things technically that could go wrong, and I want to give more time, and it's way faster and easier to do it on TikTok first. And then I'll set up a YouTube. I'm trying to get a YouTube with them, but I need him to open up. It's up to him when he can open up 60 minutes. Get on the stream and tell him, hey, dude, we want to see you on YouTube. Tell him, let's see you on YouTube. Maybe he'll do it. I don't know his schedule. I'm not going to tell the guy, hey, you have to be on YouTube. So it's just an opportunity for you guys to hear better content, or somebody challenge me on my views with crypto, whatever it is. He's a bear as far as I know. And tell him, hey, make it a gifting battle. I don't know how to do all that. I know people do that on TikTok, but a gifting battle, I just don't know how to do it. I got to figure out how to. I'm not the tech savviest guy, but I do enjoy a debate. You guys know that I do enjoy a debate. So hopefully he is, he can take a debate, and hopefully he'll debate me and push back on me. I'm hoping he pushes back, and hoping he's not a soy. But anyways, I'll be on there in about, let me take a break, and then I'll be back on YouTube, or I'll be back on TikTok. I'll put those links in the description. Stay blessed. I'll catch you guys tomorrow. Thank you for joining. Catch you later.